What's up, everybody? Good morning. We're a little behind today. Let's get going quick. I'm gonna have to skip the intro. I do love listening to the song though. All right, so open and rational. Somebody said something with the DD bands being off. I think I might have done something weird in the bot. Let me double check. Russell 18, 13, 18, 45. Shoot, yeah, that is right. That's not bad. Appreciate you guys telling me. Russell, catch it real quick. 1984. Oh crap, yeah. Oops, I know what I did. Oopsie. All right. Use it real quick. Yep. Okay, new numbers coming out. Let's get ready to get started. All right, we got it. We're getting late start. We got to go down to the. All right, guys, what's up? No, my bots. It's me. It's not you guys. It's me. All right, let's get started. Hold on, I just gotta pay attention. All right, get out the door. Let's take a look at what we got. Resilience numbers. Resilience looking pretty good. All right, resilience out there. We're opening near the bottom of the band here. Nasdaq up to ED bands. All right, hold on, guys. I'm getting a little late start here. All right, let's take a look at what we got. Resilience is positive. We're at the bottom of the band. Let's go. Let's take a quick little. Take a look at this. Oh, these are my old monthly maps. I gotta. All right, guys, take a look at this. Taking long at the resilience is positive. We're gonna have a bull long up. Perfect. Do it. Illiquidity pocket. Perfect. Okay, I like it. Nice little scout. Okay. All right. So we got so far so good. Let me clean up some of this. This is my demonstration for. All right. Oh, I'm sorry, I'm muted, guys. I've been talking to myself here. Okay, Russell, bear short up. We have trading between here and here. What I'm looking for, Russell is not the weak actor today. It looks like NASDAQ is, so we're going to take a look at this. NASDAQ's a bull long up with no monthly walls at the top. Russell, bear short up, which means I've got 174, 173 pivoting between the two. I am taking a quickie long right out the door. Just maybe 3 contracts. I do like what I see. Keep an eye on resilience, is making sure they're positive. QQQ looking pretty solid there. Adjust these DD bands, just kind of manually throw them like closer to down here. There's somewhere like that, like this. Looking clean. Sorry, guys. Getting a little late start here. QQQ, kind of in this mean reversion level, but just watch this really quick. Be careful for hedge breaks. We have to watch those very carefully. Bull long up on S&P. Remember, there's no irrational signs out the door except for the hedge break itself. So I give myself a 1-strike stop on this. That DD is coming in 84, less strong than yesterday, but still positive. So that's good enough to get that upper band tap. I would like to double down if we do hit a lower spot. I do like what I see. Right. Sorry for late start, you guys. Smash that like button really quick if you don't mind. Had essential hot pocket to make this morning. That was you gotta help with the learning. Got to be able to fly on your own. That's what I'm saying. Lee gets it. He gets it. Okay, so watch QQQ. That's the weak spot today. So not gonna be. Just making sure finance, the ones that were pulling the Russell down yesterday, are still not the weak actors today. So just making sure everything looks kind of good in finance energy. Looks like we're gonna get some pretty nastiness in tech. Let's look for bear setups. These are breakouts on illiquidity pockets. Let's look for MHP break just to see if there's anything that looks really bad there. An HP break. Let's just start there because it's probably the more probable one. Distance to hedge pressure there. So I'm keeping an eyeball on like stocks that are coming through. Ulta, Goldman Sachs, UQ, just for a hedge pressure break to the downside. Actually, let's make sure it's HP break down. Just to see. I want to make sure that nothing big is coming through to kind of scare me out of the positions here. Distance to hedge pressure. I'm just sorting them there. Looks like we got banking, just a couple of them, about 7 stocks, 8 stocks. And keep my eye on that number, make sure it doesn't change a lot. Let's do the XLK, double checking what's going on in the tech sector. NASDAQ is kind of the weaker of the two, which is okay. NASDAQ's pulling back pretty hard. Oops. Okay, so resiliences are negative, so keep an eyeball on that one. This could be a pretty nasty thing, so we got to get that thing minus 10, so that is going to be pretty gross today. I do think that we do get some downside and then it B's out. NASDAQ could be lower DD band. This could squeeze me a little tiny bit, but I'm still okay. If UBXY hedge break, the only real concern I have is, no, they're all concerned. So hedge break itself has a 10-point buffer stop. So I'm going to give it a little bit of room to move, but 10 points and I'm done. Right, so right out the door. SPY, bull long up, illiquidity pocket. SPY has a 410 push today. So that's a pretty decent move. Now we have to be careful. We need to watch for sector index divergence. So keep an eyeball for SPY to be positive and NQ to be negative. So we know in this mode that the S&P pulls the NASDAQ unless there's a divergence and that light turns on, then we'll know there's a problem here. So let's go back to the DD bands to show you really quick. We have this is typically going to be a resistance right here on NASDAQ, right there. And so I don't expect this to touch the lower band. We have a rational market minus the hedge break. So like we're on the edge of hedge break, right? More than one strike and I'll be fully convinced that's going to be called broken. So be very careful here. We might just get that resistance without touching. There's that old, if the market starts rational, there's that DD rule. It wants to touch the upper before the lower band, or doesn't want to touch the lower band first. So it's going to fight really hard to try to resist before touching that lower band. It's very common when rational DD market. Now we are struggling with the hedge break, and hedge breaks do eliminate that rule. So you can be very careful on that today. So this is confidence about 60-70%. But losing resilience, not so much. SPY resilience does call the shots. Let's make this a little bigger so I can see really what I want to see. So Huggins 0. Clearly, we need to see above 10, below -10 when those lights are turned on. So be very careful here on that. My upper target is illiquidity pocket 410. Puts about a 2-to-1 trade, about 20-point rip, which is pretty good. I do like what I see. Everybody smash that like button if you're here really quick here. Double check the news. And also we can't get behind. I know I slept in a little bit today. Let's go ahead and refresh economic calendar. See what we got going on. We have the export data coming through. Came in pretty okay. And of course we have PMI coming out in 5 minutes. So this is enough to, it's kind of a gamble. So in 5 minutes, market's going to move pretty quick. So in 5 minutes, we got a catalyst coming through, possibly, or an event coming through. Sorry. So this could be some noise here. I am pretty heavy on this position, so I probably should trim it out. I don't like what I see, so it's starting to look pretty nasty. We have an event coming out, so it's going to be a coin flip. And again, sleeping in. These are things I don't pay attention to when I should be. That negative resilience is a pretty bad news thing on this hedge break if we do get it. So in about a minute or so, let me make sure I get prepared for this. I probably should trim my position, but let me look. Is my timing off? 4 minutes? Is my clock off? 8:40, what's your clock? Okay. 4 minutes, PMI March, 19 minutes, non-manufacturing PMI stuff. So in about 19 minutes, we do have an event. So right about 10 o'clock Eastern, that'll be coming through. That's going to be the real mover for the morning. So honestly, I do just think bad news is good news. We already seen the bad news yesterday. And if this squeezes me out, it squeezes me out. And I'll just close out a stop, the one strike below. Too soon to say whether the Fed will raise rates in May. These are some news events coming through. I don't think that the Fed is going to raise rates any further than the target rate being about 5.25 to 5.5 maximum we'll ever see. And then we're going to start having rate hikes be 0 for the remainder of the year and then turn into rate cuts by the end of the year. This is what the Fed monetary policy, the votes came in during the last report. That's what they said. What each of them believe monetary policy appropriate rate would be so the appropriate direction for monetary policy, and that's what most of them believed, that the appropriate course of action was to cut rates. Before same time next year, we would be at a target rate of like 4, and then the year after 3. So the way that it looks is that they believe that the appropriate monetary policy, which I think is bullshit. I think we need to get to like 10 plus to really control and save the bond market. But at the end of the day, they know something I don't know, and whether they're just throwing out some good vibes to save the banking industry and put some hope in the stock market before regional banks shit the bed, I really can't say why they believe cutting rates by the end of this year is appropriate, unless it's just to save the stock market. Inflation is under control, though, so I think that maybe the post-COVID situation of cost push inflation and high raw materials costs and stuff is solved itself, and we know it would solve itself. I just think it would solve itself in 2 years, but looks like it did. So we're seeing that, right? Things are looking pretty solid. So nothing's going to really mean anything until we get that till that new stuff comes through. So resilience being negative, markets pushing higher. This is not a good sign for me to be in a trade right here. I probably should start trimming if this doesn't start to move. So remember, let me actually take a photo of this too. Let him know this. Looks like the running process that does the light bulbs is. Oh wait. Oh, this is break to the upside. Okay, this is why I should get up early. Okay, let me double check this. Okay, so S&P is break to the upside. Let's be clear here. This is an upside break, and I think I might want to put some numbers there because this just alerts a caution, and maybe we should put a second column that says up or down. We're irrational, but S&P is breaking up and Nasdaq is breaking down. Do y'all think that in programming this hedge break, we need to put dash up or over here to the right, up, down, up, down? What do you think? Only 53. Yeah, toss a little like at the stream here. Let's do up, down, right? You guys ready to see how we design a trading platform in the professional world here? Hold on. Let me get out. Look, I went to school to learn how to do this, okay? All right, so this is how you design a trading platform. All right, you get out this thing called Microsoft Paint. Again, it's okay if y'all know how to do this. Only smart people like me know how to do this, and it's okay. All right, and you come over here and you... This is how we do it in the modern day. Oh, wait, and then you can click this button. Look what it does. It lines the text up for you. Look how cool that is. Don't even, y'all can't do what I do. I mean, that's why y'all pay me the big bucks, okay? Ready? Let's turn this in. Okay. Y'all like it like that? All right. Actually, orange. Orange is my, this is just a note thing. Okay. All right, cool. All right. That's how we do it in the modern day. Okay, let me put a ticket in really quick. Just a quick sprint for the future. Snag it. No, I use Windows snipping tool. Like snag it. I should use snag it. Snag it is for like professionals, for real. I know. I hear that people use like tools like that are so much better. Snag it or whatever. See, like I've always used snipping tool, and I'm always afraid that I'm gonna take a screenshot. And yeah, I'll have to try it out. Somebody said I would pay you to use snag it instead of Paint. they're 100% on the same page as you. They will pay me to stop using Paint. Yeah. I know. I probably have been doing that same move. Control C, Control V, open Paint probably since middle school. Ooh, yeah. I think like I'm scared of technology changes. So one of these days I'm accidentally gonna drop hedge pressure calculations on the middle of the screen, and then everybody will have it. Let me see. Let me drop this in really quick. Feature alerts. Each programmable alert has 2 fields. Descriptor. And then an output. That is like a output that and this and so we'll say we're gonna say in this instance the output is programmable by the user. If logic is true, output is Z. If logic is false, output is Q. And then you can say like user, these are for when you guys can program your own alerts. User can program what Z and Q display are. In this instance, it would be up. If green, if true, then up, else if false, then down. Okay. So what I actually did was a little bit more complicated than what I just drew on the Paint. But the idea is that you're gonna have 3 programmable fields. When you say add alert, alert will have 3 different entries, right? It'll have a visual cue, it'll have a descriptor, and then it'll have a text output. And the text output would be programmable. So the example would be, if true, what do you want to display? Green light bulb, red light bulb, yellow light bulb. If true, what do you want the words to say? You can program the words itself. So IWM just flagged. Let's see what's going on. Hedge pressure break to the upside. Let's take a look. Be very careful on here. I do want to take note of these processes though, because I do notice another thing. Speaking of snipping tool, What I like about snipping tool is that I can choose where I take the screenshot. That's very important. So to snag it, okay.
It only highlights what you're up to.
Ooh, I do like that.
It brings it out, so
Yeah. Let's kind of get to them than that. All right, guys, what's up? Opening price determines hedge pressure break direction of correct. Yeah, that's true. So we did have a little bit of a... So there's this rule that we're talking about in the NASDAQ rule, right? So this is one of those things that... Right here. Right, it's... If all things being equal, it will not want to touch that lower band before it touches the upper band, with DD being the way that it is. Now, again, a news event or a catalyst or hedge breaks can cause irrationality. That rule goes out the window. We don't use that consistently when irrational flags are there, but it is still a possibility. So the way that I use it when irrational is that if it does break through this lower band, then all hell's going to break loose. So it's going to try to resist there. There's no guarantee that it will. When markets are rational, it will not want to touch this lower band. So that's one of the things to take note of. And that NASDAQ holding right there is it was a scary place to be in a position going into this event. Usually I don't like to be in a position going into events, but I didn't want to see a nice red day yesterday to get a nice green day pushing today. So hopefully we can get this. That short squeeze is still very powerful. I'd like to see the market move. So let's talk about contingencies, right? So of the three indices, it looks like NASDAQ is the weaker one. It's very rare that NASDAQ will pull the index down unless there's a massive amount of divergence. And we're likely getting there, and we've seen this before, where tech stocks were the ones that pulling the market down. So I'm just going to double check to see if we're the chip makers. So I just see Micron pop up on the scanner this morning. Just at the runners, we're seeing things that are breaking down hedge pressure. We had 8 a little bit ago. Now we're seeing there at 27. So we're just going to see what stocks are. And I'm going to add a little filter on there, make this custom range. Make sure that these are just showing stocks that are greater than like 10 bucks. They're going to be penny stocks on this list. So about 20 something tickers breaking hedge pressure to the downside. Let me go ahead and make a scanner on my other screen. And let's do hedge pressure break up. I have MHP breakup, hedge pressure breakdown. So about 19 breaking up. Looking on my other screen, nothing really big. DocuSign, Moderna, JP Morgan. So financials are, some financials, at least JP's looking good. Let's look at the XLF again one more time. 8 minutes until a news event comes through. Yeah, so this is what I was seeing on the XLF. Bear long down does press. You pull up your liquidity maps right here, you'll see this. Where did this guy go? Okay. Divergence between indices is crazy. Not sure how to approach that. What the rule was that when there is divergence like that, it is a... Oh shit, we are moving. Hello. I mean, I don't hate the idea of making money. Question is, should I just take some profit before the news and then dive right in? This is probably smart. I think the universe just gave us an out. Let me double check this. Okay, I'm up $1,800 in my challenge account. Does look pretty solid. Okay, I'm just gonna trim. So it's smart to trim going into an event. Let's go ahead and let's see. Those resiliences look pretty solid. I'm gonna go ahead and take profit. We do have an event coming up pretty soon, so let me go ahead and just trim 1, 2 of those. I'm gonna trim 2 of those, and yeah. Okay, so I made 1,700 in my 10K challenge account. About 600 here. I'm gonna stay long one just because there's a resistance, and I do want to get back in on the long side. This divergence is gonna kick in. So, do you guys remember the rule there? Sound is okay. Can you guys hear me? Sorry. Sometimes I mute my mic on accident. Always smart to be flat going into an event. So I did put some profit in my pocket, not a lot, but just enough so that I can actually dive back into the trade if it does fall. Okay, cool. What's up, you guys? Smash that like button really quick. You guys have not checked out the Rockstar Extended Trial. That's about to end. By the way, $35 a month. I'm going back to 200. The divergence rule is a brand new thing. If you can remember the rule that goes with that. So you guys want to celebrate? We're about to have our 2,000th user account since we started this extended trial. We just passed our 500th non-lifetime concurrent monthly subscriber. That's the business milestone. 500 monthly subscribers. So that's amazing. Oh yeah, that's amazing. We're gonna throw a party for that. And we're soaring past it. We're getting about 10, 20 people a day now. So it's crazy. So excited. You guys are amazing. We love y'all. And we love you guys supporting Rocket Scooter. It's huge. If y'all start to realize, if it starts feeling like it's getting too big and there's not, and you're like, we need more people, like, let us know. Because, like, you know, Slacks, bless his heart, working his ass off. If it's like, if you guys are like, we need some more people, Ashton, Slacks, y'all let us know. So concurrent, that means active right now. So clutch trim. Yeah, with the XLF hitting a bounce point, it's just smart to trim a little bit. No reason to go too heavy. Man, I love when I see that. Remember, we have 4 minutes until a possible news event comes out. Remember, when you're trading, you have to be careful of what's controlling the market, what's making things move. Anytime there's divergence, and I'll talk about that really quick. Hold on. Do you guys remember what we said for the rule for index divergence? I'll have to revisit it. It's a new rule. It's not a... So what we noticed was that when the index divergence was a thing, right? Normally we say the S&P pulls the NASDAQ around. And the times that we notice that there's sector rotation, like huge amount of sector rotating, people are moving from one sector to the next and their investments. What you do notice is that when NASDAQ was like minus 50 and the S&P was greater than 10, essentially that'll flag this yellow, right? And Louis was saying it. What we noticed is that 2 days in a row, the DD roll outright failed. So what happens is there's just that unusual amount of shifting caused NASDAQ or whichever one, I think it was NASDAQ, to overpower the S&P, and the NASDAQ created that pressure in the S&P that ultimately topped the top of the market while it was trying to fight. Oh, I do remember what the day looked like. Let me get my drawing tool. It looked like this. Like I do remember that day. The S&P had like it was a type 2 resilience. or mode 2 and a hedge pressure, right? And what was happening was the S&P was a bull long up, positive resilience, positive DD, and like DD band was up there. And it fell, and I remember the first day, and it was like fighting, and then it fell, and it was fighting, and then fell and was fighting, and fell and was fighting, and then it just did this for the day. And all day long, it was like, man, bull long up with positive resilience was happening. Well, this particular day, the S&P resilience was like 12, and the Nasdaq was like negative 60, right? So when there's a massive amount of divergence like that, when we went, it causes you to dive into isolate the sector that is the problem actor. And what we found out was there was the day that, you know, the oil alliance was scaring people, so everyone the XLK was tanking, and the XLE like basically did this, which is why the S&P did that. The XLK just basically collapsed on itself, and the XLE rallied for the day. So you had just a massive amount of sector rotating. So what it does show is that a couple of big actors or big firms, despite all pressures wanting to hold, and the S&P was really fighting, it just shows that was enough for the Nasdaq or one sector to overpower the greater market. So this will flag yellow when they diverge. It's to clue you in when it's very rare that they diverge. So when they do diverge, it lets you know that there's unusual behavior. Okay, we got that news event coming out. Let's read the numbers. Let's go. Quick. Oof. Wait. Where's my thing? That's not it. Okay, let's go really quick. Economic data coming through. PMI 52.6 on a 53.8. It's not too terrible, but we're expecting it to be bad anyways. Let's see, what do I like? All right, let's go. I like it. Whatever. Okay, S&P resilience. We're gonna watch this. We're gonna watch this guy fight. XLF. Let's keep an eyeball on the XLF breaking through the upside. SPY. Let's take a look. All right. I'm going to add one more right here. Oh, I get so excited when events come out. Keep an eyeball. Resilience is going to hopefully be positive. The S&P is holding the fort right here. S&P hedge break to the upside. My stop loss is on the other side of hedge pressure. So for resilience, we're going to watch these two today. Be careful on the divergence. That Nasdaq. Ooh, that's gorgeous. Okay. Come on. Is that window open? Just kidding. All right, look at this. The no touchy on the bottom roll. Now, again, when irrational, that is a very, that rule is not as consistent when irrational, but it still is an effect. So it's when the market's rational, I'll take that bet long and strong that you don't touch the lower band. When it's irrational, it's possible that you can touch that lower band. So be very careful today. So we're going to watch out. The resilience is coming through. Russell's taking an interesting dive off of those numbers. So let's analyze those numbers really quick before I decide if I want to hold this position or bail on it. Okay. This is the Servicing Purchase Managers Index PMI. It's the non-manufacturing sector, and it's just showing, let's see, 52.6 is still growth over the last, I would say, no, hold on, 53.8, 52.6. 50.6. Where's that? Where's the April 5th, March 24th data point? 50.6, 52. Where's that 53.8? It's missing on the graph. What the heck? Where'd that 52.8 go? Did they revise it? They must have revised it. Oh, look, there's an error on this graph. Okay, so that's 53.8. So it's down from the previous, but I mean, the manufacturing sector is the weaker of the two, and the non-manufacturing is the one's coming in pretty solid, right? So let's take a look at this. Actually, let me double check. No, that's the services. My bad. Wrong number. Okay. Don't listen to anything I just said. Here it is. All right, so it is coming in. Greater than 50 is good. The expectations are really high. So it looks like all sectors are looking pretty bad today off of this news. Russell's getting a little bit hit. A little bit of a hit compared to the other two. Russell's the one I want to watch now. But non-manufacturing employment numbers are down. It's the same thing we saw. New orders are down against expectations. But let's see how they are compared to history on the graph. Right, so this is all over the place. And this is just showing a general contraction of new orders, right? People buying stuff. And so new orders are down. Production might be down. That might reflect that we did lay off some essential employees. So that is pretty scary. Keep an eye out on the Russell. Like I said, I'm just in 2 contracts. Nothing too heavy today. But I do want to make sure I keep an eye on this. The employment's the really important one as well. Are we hiring? Which sector are we hiring and not hiring in? This is a lot better than the manufacturing sector. So in the non-manufacturing areas, it is looking really good. Like 51, 54. This is expansion. In the employment side. So this does match with the Jolt say. We are looking to hire people and get people in jobs. Keep an eyeball on this, making sure I'm not too far down. Watch out for this hedge pressure break. Resilience is still kind of on the fence there. I need resilience. If it's less than -10, I'm gonna be scared of this. And that NASDAQ is pushing to that lower band. So we're gonna keep an eyeball. That's why I have this one front and center. That is that spot. You want to be daredevils here? Don't want to bet that SPY holds hedge break or holds hedge pressure. Ooh, pushing the lower lows. Pushing the lower lows. It's trying. Okay. Let's keep an eye on your DD really quick. So my question is, you're going to be very careful. Watch this. If this goes below -10, I'll probably just close it out. Yeah, I was watching the DD numbers today. So look at IWM. That's what really took a hit. It's still okay on, I would say, any downside. Russell has a little bit monthly hedge pressure there. That'll be what really scares me today, Russell. We are in a liquidity pocket on the NASDAQ. Just be very careful. Any downside move on NASDAQ really just kind of, again, DD band is right here. There is no downside underneath that. Let's go to monthly to see what the floor is. Yeah, so if we do collapse today, the market could go hundreds of points, right? But underneath here, there is no observable bounce except for that Russell. So the Russell would be where that support likely would be, or the S&P's DD. So the market has, in my opinion, before it shits on itself, one more possible lower low. And I think I'm well within the tolerance of maybe wanting to just hang in there and doubling down somewhere inside of here just to catch a scalp up if it doesn't hold. But like I said, this is starting to make me want to bail early. So we're going to be very careful today. That resilience is pushing hard. Again, it's expected bad news, right? We know that the manufacturing side was down. Non-manufacturing being just as bad. It just shows general contraction in the economy, right? So laying people off is definitely having a definite effect on what we are expecting to go in the market. Now, the question is trimming a little bit, adding a little bit more. How much am I willing to lose on here? So with resilience being negative, it's pinning this as resistance. The question is, do I want to hang on? Yeah, it's looking a little booty. Don't like it. What's this elite? What is the ETF? Just double checking. Daily loss is like 3,000 or something. Oh, it's 100 off the top. Okay. Of the two, let's double check. Let's go back to financials because regional banks were the ones that were really nasty yesterday. We are having that resistance here. Yeah, so this is scaring me. I don't like the resiliences here. I might just trim out if we get some volatility on that QQQ. There's a little interaction point right here. So this might be a squeeze out again today. We'll see. The CD band is kind of what's suspect. So my question is how I want to behave here. This is obviously random from liquidity pocket. And of course, IWM does have a support here. The only place the market can likely pivot is here. So I'm gonna keep IWM fresh on my screen just to double check. This will be the scary part that really gets the market going if you do break a monthly hedge pressure on an index. IWM is really far away. Like I said, I still believe in the short squeeze in the near term, so that's looking okay. SPY has nothing, and a bear short up. We can look on liquidity map, does have low call wall support as well. So SPY also has support-ish down in here. The question is, that's 20 points away. So I'm like, ugh. I kind of don't like that idea. So I'm sitting in a small position, so I might actually start trimming this. So resilience being negative does show that I'm expecting this to be resistance right here. So I'm going to give it like a minute or two, or if it pops up into here, I'll probably just trim out. I'm going to watch it though. I know that we're getting a little volatility around the NASDAQ, so yeah, this might be a lost day today, so we'll see. EVXY is pretty clean. So what might suck is that might be a flush before a pop. I still think that the market needs to bottom somewhere today, probably lower from here. So these are indication that's probably going to come down. My question is, I'm only in a tiny position, so I'm not really worried too much. And when IWM hits monthly hedge pressure, this pushes back down to about 4,010. That's still okay. My loss limit's still all right. Yeah, Tesla's dropping. Let's look at it. Let's look for some possible bounce moves in certain sectors. So Tesla and other stocks sitting at monthly hedge pressure. Let's look for distance to hedge. Like I said, I think we can get one more push down. Goldman, American, MGM, Google. Let's see what Google looks like. Oops. Yeah, this is I need something that's near. So we saw this is another one of those quote unquote index divergences, right? Where the DD rule, with the light we had a rule of thumb that was like greater than 10 or less than negative 10 would cause an unusual divergence, would cause an unusual behavior. So the potential of the market or the S&P to remain bullish when one sector is getting pummeled really hard, that's what that rule was. And the rule of thumb was greater than 10 or less than negative 10. Which is to give it a little bit of a span. So we saw today in the actual moves, the S&P was, for the most part, positive while the NASDAQ was negative. And again, it should have flagged yellow. So I'll have to double check the numbers here. At this moment in time, for a couple of seconds, it would have flagged yellow and then back to green. So maybe I didn't see it, but I'll have to rewind the stream and see if it happened. But the divergence is what eliminates that rule to push in one direction. So this is looking a little scary today. I'm going to keep an eyeball out here on QQQ. If it does take a nosedive from here, I think I'll call it. Russell's pushing down to monthly hedge, which is good. That's what we want to see. So my question I have is, do I want to take a bounce play off of here to bet that the market does repair? This is that bounce that we're looking for in Russell. And I would say that if NASDAQ's looking bad, Russell's looking bad, and S&P's looking bad, all things are selling. It's not really cycling as much as it is. All things are looking pretty bad. But the S&P being less nasty does imply that it's not necessarily banking or energy that's looking terrible. Those probably are holding the fort a little bit better. Yep, that's holding the fort. Financials holding the fort, definitely trading up. So we're going to look at... Ugh. All right. Yep. 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 Yeah. Well, the only support period on SPY is going to be the DD band. So this is the bottom. That's why I'm only in a small position here. So with the S&P resilience number, so when you interact with monthly hedge pressure, the yellow resilience is coming into play. So SPY monthly is really, really, really far away. QQQ monthly, really, really, really far away. So what is going on with me? All right, there it is. So to draw out SPY's resistances today, the problem now is resilience is forecasting this and then resistance there. So I'm kind of stuck. DD does show, now remember DD is a SPY thing, but we use that number for the entirety of all the indices, right? So Nasdaq is one breaching through its walls down here because of that divergence. Again, the divergence says that Nasdaq can just rush really fast. Typically when markets are rational, they're all going to kind of trade in tandem. Everything's kind of moving together. When people are selling one sector, jumping in another, selling one sector harder, you may see the Nasdaq being negative and the S&P being positive. That can flag divergence. And divergence can show that the Nasdaq or the Russell, if we do one for Russell as well, can just be tanking on its own. Or the Nasdaq can be taking on its own hard enough that one sector, it tells you to identify what's the problem sector today. And so with that, you can see that one sector could just be sold hard enough that while the desire is that the indices are going to want to reject and not press lower DD band because of that, two things are happening. Irrational rule. It means, you know, that you take that rule with a grain of salt and we don't really use it anyways. And also divergence throws that rule out too. So it's two different pre-checks for the DD rule today. I was just saying, why is Matt more often long? Because shorting's for newbies. Literally, shorting is for newbies that don't pay their bills with trading. You should rarely be shorting a market. If you actually count the daily candles on a bull market, it's about 60-40 green to red in any bull span, 50-50 to 60-40. So there's always more green candles than red candles in a bull market. In a bear market, there's also more green candles than red candles. We actually counted them since the top of the market in the October bottom. And I've always proven that point. I've actually done that trick for years and years and years of training. Any bear market span will have just as many green days as there are red. It's just as advantageous to long a bear market than it's the bull market. When I teach people that, their minds are blown. I have people that say I haven't pushed the short button in years. Because they understand that even in a bear market, it's red day, green day, red day, green. You go count the candles. Don't be like, what is this guy talking about? Literally go pick any bear span, measure from top, year worth of data to the bottom, count every daily candle. Every other day is green. So when bull markets have more green candles and red bear markets have more green candles, it's always advantageous to know that if you just park your money somewhere, long is always a better option. I only short when it is a short market, below monthly hedge pressure, and I short from something to somewhere. Scalping long, scalping short, statistically, picking long trades or sitting out of chase shorts have always served me better. I mean, I have a 70-80% win rate. So while I may be wrong, when I'm wrong, when you trade short markets, you have more volatility. You're committed to the trade for longer. You have bigger drawdowns. You have to manhandle the position a little bit more. Get in, get out, get in, get out, play with it, throw it around. It's just terrible. So the idea is that long plays, if they're available, are less volatile and they're easier to manage. And so in all particular instances, that's why Matt very rarely, if ever, chases a short or looks for a short. The market will tell me to short if it's a short play. So it's like, oh, should I short this and fade this? It's newbie trading, right? It's a great question, though. So left to its own, there are always buyers in the market. So it doesn't mean that I just long all the time. It just means most scenarios warrant a long. So when I short, it's off of monthly hedge pressure from the bottom. So I take the liquidity maps shorting from monthly all the time. So like BRSU, I'll short. BLD, I'll short. Like these right here, like the ones with the red arrows. These are the ones I take. Trade 2, that trade right there. So those are the ones I do like to take. Trading a short in a volatile market is always hard to manage because what happens is that volatile markets commit you to long periods of time until that one person decides to dump and then the market goes in your favor. And you usually have to get in, get out really quick. You have to wait a long time. And so at the end of the day, this is just not looking good. I'm not getting the bounce I want. Let's double check Russell really quick. You're always having to manage. There's that bounce point on Russell. So this we're going to watch today. There's really nothing else underneath this if the Russell decides to capsize. So be very careful today. Yeah, so stocks on an individual basis, you understand what's going on in the market and what's possible. And stocks have their own liquidity map. What you have to do is you have to look at the index, then the sector, then the stock to make sure there's health. So look at the sector Tesla's in, run that ETF, look at the index, right, as well. So everything's pulling back a little bit. And so we can be very careful with stocks pushing below monthly hedge. So being careful today. The index resiliences are both, we don't have one for Russell, but these both being positive and Russell being the weaker, I would say not the weakest sector. Looks like NASDAQ was the one that was the weakest one, and NASDAQ monthly resilience is positive. Russell is likely to hold its monthly. So I'm still feeling pretty confident here, but by proxy, Russell might save the market, right? So we're expecting a little dip to rip this. I do like it, so we'll see how it works. Okay. Let's hang on there. So an event today, events can cause a possible catalyst. We have to be very careful. What moved the market today? Just a news event, right? So in news events, you have to take everything with a grain of salt. You have to look kind of on a broader. So right now, we're trying to see what there's clear divergence between the sectors. I'm monitoring all three of them. So which one has an immediate resistance? So right now, IWM is playing right at its monthly hedge. This is a likely support. I want to see the market breathe here. I want to see anything start to change here. If not, I'm just going to bail. So like the market throws me a little bit of a bonus here. Let's zoom in on resilience and see if it gets any better. What happens with IWM bouncing there, and what's going to happen with stocks like Tesla and others that are on their monthly hedge? Are they going to hold? So be very careful watching some of these on monthly hedge breaks. Let me make a scanner setting over here, and this is a good one to kind of monitor. Let me teach you guys this one. If you want to do a quick scanner tutorial, let me show you something. Okay, let me look my lower left screen here. I'm not. All right. So my scanner, I have hedge pressure break up, monthly hedge pressure break up, monthly hedge pressure break down, hedge pressure break down. It has all the stocks that are under those conditions. I can do distance to hedge pressure. Distance to hedge pressure. I say distance to monthly. And you set them like that so you can monitor what's going on. Just keep an eyeball on those. Like I said, this is a news event, so it could possibly be, you know. You have to be very careful, right? So I took a quick scalp off of the technical. This morning we had all the data looked pretty good. Then a news event comes out, and then of course the market's going to respond. So you have to be very careful when you're trading news events. You have to understand that You're trying to get ahead of something and betting on something happening. It's not, okay, resilience is positive, let me long the market and chase the long. It's resilience is negative. We hit a support. I'm going to bet that the market gains buyers here, and then that goes positive. I'm betting that resilience follows my trade because we are in an event, and events can take a divergence. Anytime you have news or, you know, something, an unusual flag or something that's just not, you know, the market drifting along, you have to always play ahead of what you think is going to happen, right? That's how you trade irrational, same way. So anytime you play news events, you're not going to just watch the market ebb and flow. You're going to watch people respond to what they perceive or anticipate before and after that event or that news release comes out. Now, we expected it to be bad because the other number was bad. Manufacturing came out terrible. Non-manufacturing came out terrible. We fell to certain resistances. Tesla holding there. Let's see if IWM's holding hedge. So what I do is I try to find where all my indices are going to pivot. Put them side by side. Russell has a pivot there. I'm really far from DD bands. QQQ has a pivot right at DD band as well. And of course, SPY is just kind of sitting in its own hedge pressure. So when you trade events, remember, it's not just, you don't sit here and say, okay, you know, what do the numbers say? Everything leads the market. Everything leads the market when the markets are just rational and ebbing and flowing. It points in the sum of least pressure. But when an event happens or a news event happens, people are shifting their positions very rapidly, as you see this high volume right here, which can cause just randomness and irrationalness, right? This has to do with people responding to the news. And now, as that volume starts to settle out, I'm wanting this to go there and this to follow the rule. And I want everything to stabilize once that volume dissipates. Do y'all see how this works? So the S&P traditionally should be decaying to right about here. So as soon as that volume declines, I want to see, okay, where's that autopilot, right? You're trucking along. You hit an icy patch in the road. Oh, steer the car left, steer the car right. Okay. Whew. Okay, the ice is gone. What side are we on? And then it's kind of like if you think like you're in outer space and you're drifting this way, and you turn your boosters on and you push yourself this way, and then you let go of the booster, then it just drifts in the correct direction. So let's see how things stabilize when the boosters turn off and we just go in whatever direction we sit out. So when you're trading events, you have to trade this style of trading. You can't assume that you're going to have technicals or levels or resistances guide the market. They can, but the market's going to get unusual volume that could be a catalyst. You have to let it stabilize and see what the market really believes. Now, this volume starts to die off and we're trading below hedge pressure and resilience doesn't repair itself, then I'm pretty much doomed and I'm out, right? That's how that works. Have any questions? Questions at all? So SPY, resilience needs to be greater than 10, less than negative 10 for me to consider the action on it, to be very confident. Right after the volume dies down, what is resilience doing? So you have to make sure that when an event happens, you need that volume to start lowering itself and then you start responding. Right now, it's still in the middle and still kind of really booty on NASDAQ, right? Yeah, and so we clearly had irrational signals, so overshoots are expected, right? SPY tried to break up, pressing back down, and the question is what's going to happen from here. Anytime you're, okay, let me break some ties. Let's go ahead and draw some resistances, right? Let's see what we got. If we get any positive resilience, we're going there, right? Likely so. DD. Number 2, resilience negative. There. So we have to be very careful here, and it doesn't look like it's really repairing itself. So the question is, I asked myself, okay, allowable overshoots, am I okay trading from there? Let's double check IWM. So I might just close this at a loss. It's okay. So down $500, no big. Right. Let's see what we get. Need that res to push one more time. We're gonna see what it's doing. Yeah. Keep an eyeball on this one. So this is a tricky day. Yeah, trading into events, you have to be very cognizant. Now, again, Nasdaq is pressing lower. It's just not looking good. So we didn't get that repair. I'll take one more cycle of this and just decide to call it a day. Okay, so this is that second wave of selling. What is SPY going to do here? Let's see what it does. I think it's very questionable from here. Nasdaq is looking worse. Russell again testing monthly hedge pressure one more time. That's a really sharp candle there. All right, SPY trying to press lower lows. Let's see what we get. Tough. IWM pressures. Like I said, event trading for the most part is you're trying to bet on indications and tools lagging as the market is responding to random pressure. So I need the data to come repair itself. If SPY was like minus 20, minus 30 right now, I'd bail. It's right on the edge of me bailing. The question is, how much, you always have to say, how much am I willing to lose and what will my loss be if it goes there? Right? So how much I'm willing to lose right now. If Russell starts pressing through monthly hedge, then the market's going to be doomed today. SPY likely has another bounce point here. Russell's going to provide some support there. SPY's going to provide some support there and there. So my question is, do I bail now and try to dig in on my fundamental long for later, get a better reward for less risk, or I just hang in there? And a lot of times I just decide that, is that drawdown enough for me to not have to, shift my position out? This is still like, okay enough. I'm not in that big of a position to really care. If I lose that trade, 2 contracts, not going to be worth a lot on the downside. So everybody talking about, if you're trying to say, what do you do? What do you do with Rocket Scooter? What do the signals say? How do you read this? And the idea is that So qualifiers, we talk about this all the time, right? People need to understand that when you're trading in an event, events can have random noise. If you have irrational flags, you have 3 of them right now, 2 yellows, 1 red. If you're trading at all, which if you've been here less than 3 months, the rule is sit out. If you didn't sit out, you follow a different rule set. Whatever you choose to do, you choose to do, right? Lesson 1 is irrational signals. You sit out, and what I see, and this is what you battle with as an educator, right? People day one ready to turn on. People are so used to being sold signals by garbage men that they're used to being like, okay, where's the signal? Where do I buy? Where do I sell? They understand that the magic, and it literally says in lesson 1, the magic of what we do here, not really magic, it's just rules. And the first. Lesson 1, literally lesson 1, a qualifier, a word you must understand fully. This is the most important thing we teach in bold text. Pay close attention. Qualifiers are the sauce behind when to use, when not to use, and how to modify the use of each indication. I think someone in chat says Rocket Scooter was pointing at a bull day, and I got in a long trade, and there's a little clover by their name, which means they just joined yesterday, I guess. See, when you're used to buying signals and not learning how to trade, you're going to be following signals and understanding qualifiers are the difference between what works and what doesn't work. When are your in tools good to use and when are they terrible to use? And irrational markets, each of the rules are different than rational markets. An irrational market, what we train is that as a trader, if you've been here less than 3 months, you can't, what I'm doing right now is trying to get ahead of a signal move because it is now unusual and high volume because of an event. A bad news event has come through. Okay, I'm probably on the wrong side of the trade. The signals look bad, but I'm betting on the signals turning good, as in that the shock wears off and the signals stable out. But 2 yellow irrational and 1 red irrational signal. The red is telling, if you've been here less than 3 months, we say if you see a red light turn on, you sit out. And don't try to do much until you understand how to trade. Trading events like right now is 100% a gamble. How's Wall Street going to behave on the onset of that report? It's a gamble. That's all it is, a gamble, right? You got to be careful not getting ahead. That's why when people say, you know, you buy signals or you buy moving averages or you buy, you know, all these colorful squares and triangles and whatever, there are times when they don't even do anything. You have to bet on the signal coming through later because when the market is moving on its own accord, it's going to move because people are dumping positions or getting margin calls or getting squeezed or changing their mind midday. And the amount of volume that comes through that's so massively large is enough to change the direction of the market despite all signals. And any technical rules, any technical indicators that you've ever used in your entire life do not work ever when these lights are colored. Anything but green. They're going to be delayed. If yellow, they're going to be delayed. If red, they're going to be a coin flip. We've proven that statistically. Pick anybody's technical system, and when you extrapolate over time, the reason technical trading fails is because of days like this. The signals are delayed. The signal right now, all the signs say if I were to jump in right now, I should short this. This looks bad. This looks bad. Everything's finding lower lows, and I should jump in on the short. And all of a sudden, the market's going to move, and the indications are going to move second. When irrational, you take the stance that your tools are possibly delayed as a worst case scenario. That's what you have to do. So you can't bet on technical drawings predicting the market when somebody's behavior is not, well, the charts are here, so let me short $4 billion worth of Apple. They're like, oh shit, we don't have the money to hold on this Apple position. The boss says, just dump it. Get rid of it now. They just go in and push a button. Don't matter what the signal does. And that's enough pressure. I mean, the S&P futures on just that 1 minute candle was about close to 20,000 contracts. That's a lot. Actually 15,000, that's still a lot. And the opening S&P volume was 10,000. You had an event that had more of an impact than the open. That's enough to turn things south. So this is what I'm watching right here. And again, this is right on the edge. Minus 10 is like, okay, I don't like this. Let me get out. But again, we're kind of in that range of all things are finding their supports here. I'm still watching Russell on another screen. This is what it looks like. If Russell holds the fort, then I feel pretty okay. You will see your signals likely delayed no matter what you use. Resilience is telling me that the stock market, the stocks in the market are moving before the S&P. Then resilience is a leading indicator. If the S&P is selling off first before the stocks are selling, then resilience will lag. And it's rare that that event happens. It's rare that you see the S&P getting squeezed one way or the other before the stocks are moving. In most days, rational days, the stocks will lead the index. The index will track the stocks. So when there's days that you have an index-wide event, resilience could be delayed. So when you're trading, you trade with the, okay, maybe it's delayed, and I need this to repair while I'm in my long. So now we're pressing to that possible lower low. Keep an eyeball on this guy, but that's how it works. When you are trading an event, the rule is don't trade an event. Like, don't trade events. So yeah, another rule we say is you don't trade in events unless you just understand position sizing. I mean, very small long, just tiny, right on the edge, and I'm betting on the market repairing itself, right? You know, initial shock, the S&P and Nasdaq move first, and the stocks are delaying. So I'm trying to watch for signals of the market proving to me that it's going to get worse. I need to see something bad happen. I need a trigger now. While the signals do look bad, being the fact that you have an event potential catalyst maybe could cause further move. Let me go ahead and measure NASDAQ because it being the worst one. Let's see if we do have a potential catalyst on NASDAQ. So one of the things you have to be careful, especially when you're learning anything, is you don't grab that chainsaw right out of the box and rip the cord and turn it on. I mean, this is trading. You have to understand all. Oh, don't push these two buttons at the same time or you'll chop your arm off. Oh, I'm glad I read the instructions. So you have to be careful, and you only have yourself to blame if you don't read the instructions. So this was today. There's that volatility right there. So let's see if we have a catalyst potential. Let's mark that line up. Let me just double check. Okay, let's take a look at this. You're going to be very careful. Okay, there's that volatility, there's that V, there's that tightening up. Okay, there it is. Let's monitor there. Risk interval on NASDAQ really quick. Let's just check it. It is 115.5. Okay, let's just mark that. So we are irrational in DD bands breaks. Be very careful. Let me just mark 115.5 so I can find that catalyst level. That will be the only bounce point I can see in NASDAQ coming through. Let's mark it. Event trading is a pros only kind of thing. 115.5, 115.5. So 13, 1, 49.5. That's 15.5, right? 115.5, yeah. Okay, that's not right. What did I do? Oh, I'm sorry. 0.49. There we go. That's better. There it is. Okay, so let's mark that. Wait. We'll call. We had to give this. Cancel really quick. That here. We're just doing. This is red line stuff. It's red really quick. We'll call this. This is EMI. There it is. There's that balance point. All right. So that's at that level that I want to interact with. And then we'll do PMI here. Okay. So now we have potential catalyst. That's that last little bounce point. Nasdaq is pulling the shots here. Take a look at that. The S&P. Let's see, at the top was about 28.05. That's not a full risk interval yet. Now this is that rescue spot. If there is one, that's where it is. And so the only point to say is that the market may push, and we're probably stuck inside of here. I don't like what I see, and probably seeing the Russell press through monthly hedge, just looking worse. Yeah. So this is probably time to pull the plug if we don't get any move off of here. Man, people. So we're gonna watch today. This is the driving force today. Is this event? Is this event enough to catalyze a sell-off? That's what we need to see. So is that just the low to get in on? We'll have to see this one. So when you're trading events, you have to understand what you're in for. Look, I small position, like I said. This is the second place, and I decide, do I want to trade from here or not? And again, dig out of this. It doesn't look good with resilience being negative. My upside target is only to the resilience bottom redistribution zone band. So let me go back to my main tool here. SPY is kind of right near the edge. This is where I was expecting some support to be. Right about here on SPY. So this is that place. We got to be very careful here. So yeah. Watching IWM and NASDAQ being the worst of the two. IWM is very close to bottom DD band as well. Is this that second low that the market rescues itself at? And I have to decide if I want to just add one more in my position. Like I'm way above here on the starting point. So we'll see. Actually, let me look at this. I think this one, it's $100 off the top, isn't it? That could, wait, the drawdown, I went above. Okay, so I probably should not risk that. So I'm going to do is I'm going to go ahead and trim this just to 1. To lose, I think it's $100 above 150. So 600, I'm down. So that would mean I'd have to go to 40.94 for me to blow this. So I have to be very careful. I did trim that. I don't like what I see. So I might just call this one a day. No big. Down a little bit. Yeah, let's not risk that. Let's go ahead and close that out. So took a little bit of a hit, no big. Call it a day. Small position, we'll get out of here. Yeah. Gotta make sure I know where I'm at on this one. I think 150/100. You want your best trade out the door to be a good winner. Can't win them all. That's okay. Catalyst potential. Market could collapse from here. Let's just be careful. Trading events can be dangerous. My bet is probably right but early, but we'll see. I'd rather not take the risk there. Yeah, everybody here, let me everyone check out the live stream of some random gambler who flipped the coin the right way for the first time and will blow up your accounts every other day. You read what somebody just wrote. Let me go ahead and there we go. There's that bottom DD right here on the S&P. So yeah, calling it a day. Don't want to be too crazy on that one. Okay, guys. All right, I'm going to call it a day. We're going to go to Zoom in about 30 minutes. So we're going to have a Zoom call today. Everybody come out. We'll see y'all in a little bit. Took a little loss. No big. Losing days happen. And no sweat it. Let's move on to the next day. Traded small. Knew it was. Potential catalyst. Knew it was going against me the whole time. Knew I was in the wrong spot. This is where I thought the market could stabilize. Again, I don't want to risk it. I'll come back tomorrow. It'll be a better trading day tomorrow. Like I said. So the best trader, you know? I mean, I'll tell you straight up. I would trade a competition one-on-one in trading against anybody on planet Earth, and I will beat them. Hands down. Nobody has ever gone head-to-head with me, and I have an open challenge on my YouTube. You got to compare broker statements start to finish. I even offered $10,000 in an account and let them trade my money to step up to the challenge. And still, the fear of posting the broker statement, people didn't step up. So I'm not that cocky, but I know I'm pretty good. Thank you. But at the end of the day, even good traders lose and lose a lot. It happens. But you have to know how to take a loss in stride. Bro, what happened to what you said yesterday? What was yesterday? So when irrational flags happen, right? Red lights. If you've been here less than 3 months, red lights just mean stop, right? Red lights mean don't even play the market. Events can drive the market against any structure. Markets can fail outright when a news event changes everybody's mind. You have opening volume completely surpassed by event volume. right? Out the door, you had irrational hedge pressure break. The rule is sit out. If you know what you're doing and you still want to trade on hedge pressure breaks, then that's a different story. We still say anytime the market becomes unusual or irrational, trading small, even with discretion, which is why I traded small. I know it's a possible push against me. I didn't lose that much. That's how it works, right? So what was, you said, what happened to what you said yesterday? When you have to remind me, I probably said like 20,000 things yesterday. Feel free to ask a question. Actually, I'll hang out for like 5 more minutes. I just want to see if this does recover. And do you guys have any questions about today? Early warning signs, index divergence out the door. QQQ breaks through hedge pressure. Already, it's irrational market, and market's doing irrational random things, right? So this was a textbook sit out day. If you are new here, this is an example of why hedge pressure breaks are devastating, right? On the retest of hedge pressure, why not go short with resilience being negative? Because resilience does not imply a short or a long. It implies resistance in the redistribution zone. So at the end of the day, one could do that trade. And that's an appropriate trade. That would have probably been a winning trade today. 100% correct. So in an event, that coin could have flipped either way, and that coin flipped against me, and I closed. So in an event, while things did look bad, I was betting on buyers stepping in at a support in one of the weaker indices, i.e. Russell. So I'm early to the long, unfortunately, if there is one. That's it, yeah. So that's an appropriate trade. One could short off of that, potentially, yes. But my trading style is, if I'm wrong, I just get out and call it a day. I don't like to flip-flop and go the other way. The trick to how I grow my account is just to not overtrade and not to take every move I see. I don't like to chase shorts and be tied in, because when that volatility dries up, the market can very rapidly move in a different direction. So be careful, because this is the catalyst level for NASDAQ. It can get much worse from here. So because I know that, I'm out. And the idea is event trading is really a coin flip. The further analysis from here, when there's an event, it's like you can't waste your time analyzing a coin flip. People didn't like the news. People pushed a button to sell the news. Sometimes they'll buy that news. You just don't know. The irrational was a S&P broke to the upside. That was the key today. That got me. Hold on. The irrational move on the S&P was a break to the upside. And I did, my first trade was I traded from here and trimmed, and that was it. And then the event came out, and then it started pushing lower, and I was like, Right? So that's how that works. Events are coin flips, so there's no further analysis of that. And it's all in here. But the idea is, if I know that I'm coin flipping, I just trade small. That's the whole point. And while I do think the bull market does resume today, I want you guys to tune into my Zoom call in a little bit, because I am probably going to take a bet here on my 10K account right at the edge. So I might grab that long because I think that at the end of the day, I want to see the market repair itself. We are a potential catalyst on NASDAQ though. So I want to see that support itself. And then of course there's a scalp. So resilience being negative is resistance here. So there's scalp potential from there with a 10-point stop on a second trade. And then if the market does support or repair itself after the onset of the event, then we can see the market just change its mind. So typically in events, we tell you guys not to trade into an event, a news event, that is the rule. But just because I do it doesn't mean that I don't understand what's going on. Since I know it's an event, I'm not in there with like 20 contracts. I'm in there just something small. I take the coin flip. I liked what I saw. And then this was just kind of like, this was enough to... I was waiting for this to go positive. It didn't happen. It went negative. I closed it out. Simple as that. So in the coin flip mode is that I was looking for this one to repair itself and return to being above hedge pressure, right? And so the decision you make is what happens when you get to the pivot. Volume is still erratic on hedge pressure breaks. When we said that yesterday, this is exactly what you see. And I want to see what happens when that volume kind of settles out from here on out. Yeah. All right. We'll see you guys in a little bit. Losing day. It happens. No big. Come back tomorrow. It's another trading day. Love y'all. See y'all later. Head on over to the Discord. We'll be starting a Zoom call, maybe about 30 minutes to an hour, give or take. And we'll go over looking at the market during events. Make sure you don't skip the training. We'll go through. We're redoing all of the boot camp. So this is day 2 of that. Come on over. We're going to have an awesome class today. And we'll go over that and we'll chit chat. Okay, talk to you later.